Welcome to Dr. Fred Markets. This is not financial advice. Every day, the world of finance, crypto, and artificial intelligence moves fast, really fast, and staying informed is the only way to stay ahead. That's exactly what we do here, together. Let's get into today's video.
Your energy drink stash is front-running hedge funds. Monster Beverage IPO'd in 1985 as a sleepy soda company. Since then, total return over 100,000%. Every $1 became four figures. That's not a stock, that's a religion. Today, Celsius trades at a fat premium. Monster still quietly mints cash, and energy drink sales in the US alone run in the tens of billions every year. While Bitcoin chops at 64 kel, and everyone doom scrolls war headlines and cancer stories. Signal 1. The market doesn't hate risk, it hates boredom. Monster, Celsius, Nvidia, same pattern. Sell addiction, scale distribution, ride compounding. Nvidia's up almost 3% today because it sells the shovels for the AI gold rush. Monster did the same for nightlife and truckers. Celsius is doing it for gyms and TikTok. Signal 2. The consumer balance sheet never got the memo about recession fears. People trade down on rent, streaming, even protein. But caffeine, sugar, branding that screams you but superhuman, sales stay sticky. Energy drink volume survived the 2008 crisis, COVID, and inflation spikes. You aren't cutting that 2,000 milligrams dopamine bomb. That's an annuity. Signal 3. Wall Street already treats your caffeine habit like an asset class. Private equity buys gym chains and convenience store roll-ups because they know every fridge door with a neon can is a cash flow node. Distribution rights, shelf placement fees, promo allowances, that's a hidden yield farm parked in every gas station. So here's the cliffhanger. What happens when you connect that addiction engine to actual markets instead of just your pancreas? Here's the connection nobody says out loud. Energy drinks are a live demo of how niche obsession becomes compounding equity wealth, and you can hijack that same mechanism in your boring portfolio. First, the surprising fact. Monster wasn't just a good stock. It was one of the best performing US stocks of the last 30 years, beating Bitcoin's entire history on duration alone. Not in narrative, in math. How? 3 levers. Lever 1, pricing power disguised as branding. Cost of caffeine and sugar, pennies. Retail price per can, a few bucks. That spread is pure operating leverage. Your new flavor drop isn't for fun, it's a stealth price hike. Same ingredients, higher average selling price. That's how Monster's gross margins sit north of 50%, while people whine that consumer is tapped out. Lever 2, distribution as a moat. Energy drink companies don't win because their liquid is magical. They win because they own the cold shelf at the bodega, the end cap at Walmart, the cooler at the UFC fight. Once that distribution web is locked in with contracts, rebates, and exclusivity deals, a new brand needs a miracle or a fortune to dislodge them.
Let's pause for a second. Ask yourself this. Do you really understand what's happening in the markets right now? Do you know how this affects your money, your savings, your future? Most people don't. And that's exactly why you're here. Let's keep going.
This is exactly how Nvidia defends its GPU dominance. Not just chips, but ecosystem. Tools, software, vendor relationships. Same playbook, different drug. Lever 3, optionality on culture. Monster plugged into extreme sports and metal. Celsius plugged into fitfluencers and wellness theater. They didn't just buy ads, they bought identity. That gives them free marketing via social media and enough cult status to shrug off scandals that would nuke a normal brand. Here's the mechanism. If a business sells a cheap-to-make product that 1. Feeds a real or perceived dependency, 2. Has huge markups that consumers don't revolt against, 3. Gets stronger as it latches onto subcultures, then every can, pack, or subscription is a tiny bond payment to shareholders. The market calls it growth. I call it legalized siphoning. Now, what do you do with this? Action 1. Audit your vices. List what you consume every week without fail. Caffeine, streaming, fast fashion, whatever. Then check, are there dominant public companies there with monster-like economics? Find the 1 or 2 with high and stable gross margins, growing revenue per customer, expanding distribution. You're mapping your own addiction into an investment watch list. Action 2. Separate story from unit economics. Ignore the influencer hype. Read one quarterly report. Just one. Look for these lines. Net revenue per case increased. Expanded distribution agreements with. Marketing expense as a % of sales, stable or down. If those three trends go the right way, you just found your inner monster. If not, it's just colored water with a marketing budget. Action 3. Use the pattern, not the ticker. Monster already ran. Celsius already ran hard. Chasing them blindly is just cosplay. Instead, hunt for the energy drink pattern in other sectors. Cheap product, high markups, locked distribution, identity cult, skincare, pet treats, niche fitness gear. You're not looking for the next Celsius. You're looking for the same business physics. This is not financial advice, but here's the truth. The market doesn't reward what's moral. It rewards what's persistent. Addiction is persistent. Your only choice is whether you're the one drinking from the can or the one getting paid every time someone else does. So stop pretending you're above it. Pop open the 10K instead of the tab, learn the unit economics of your own vices, and make sure at least one line item in your portfolio gets stronger every time your friends need an energy boost. Hit subscribe. Tomorrow, we talk about another habit that's quietly compounding against you, unless you flip it. This is not financial advice. If you enjoyed this video, please subscribe to the channel and check the links in the first comment below.
That's it for today on Dr. Fred Markets. I hope this gave you clarity and a new perspective. Remember, this is not financial advice. Always do your own research. If you found this useful, subscribe. It's free and it helps the channel grow. Find me on the blog at drfredmarkets.com and join the newsletter via the link in bio. I'm Dr. Fred Markets. See you in the next one.